Greetings, beloveds. Eric Mother, Mother.com with the weekend market analysis for Easter weekend, April 4th to April 9th, 2023. So markets are closed on Friday as I'm recording this. I'm going to go straight to it. We're going to begin with the NASDAQ here, and on the weekly, this is the level I've been talking about as a potential area to watch for market to decide whether it has energy to continue with its recent recovery, or this becomes a stall point. So you can see if I draw the line there on the NASDAQ, this is the 5-year weekly. We can see we've come to tag this same line, and this week we are respecting this area. So as long as we are seeing resistance on the NASDAQ on this line on the weekly, I would suspect that this is a market that could start pulling back. And I want to discuss the blind spot in this video because, in my opinion, this past week, I started seeing some things that were breaking down or seemingly breaking down. And here on the NASDAQ, if you allow me, I can draw a couple of lines. I can draw a line as such. Now, this line is a line that gives us some little bit of insight here. There was rejection with uniform activity. We have a multi-month pullback here. Again, same thing in, let's call it summer of 2022. And here in 2023, we've already tagged this twice. Let me add another line for consideration. And it is now the top side line. And from this view, if I draw it that way, we can see that there was a double top rejection at the highs or close to the highs here. And we seem to be tagging it as of right now. Bring back the previous line that I began this video with, and you can see there's a lot of convergence of the lines here, that the NASDAQ would have to clear. This is an issue for the market, and the more we start pulling back from this area, the more we're going to get some type of a multi-week, maybe even a multi-month pullback. So this is a critical area in my opinion. But remember, this is still within the construct that we are crossing over on the moving averages, and over time the market could go higher if, and again if, we can clear this area where the RSI seems to be stalling currently on the NASDAQ weekly. We have to clear this if the market is to go high. And the more we pull back from this area, the more I would say be very careful, because I don't think we get a shallow pullback from here. We might get a serious pullback. So we have to be careful. Maybe a pullback could test these lows on a weekly basis, or even the lows here for December 2022 on a weekly basis, if this resistance here is confirmed on the weekly. Now remember, this market is giving us mixed signals at the moment. We can see that we did clear the weekly resistance trend line on price. So we've been above this over the last, let me see here, going back 3 weeks, we cleared this, and market is still acting above that level. We are also above the breakout level from a weekly perspective. So that's also another level to watch. I would say this level is one of immediate interest, because yes, we cleared it 2 weeks ago, but this level could be a good gauge as to the market's intention. Anything back below this price, especially if we close below this price on a weekly basis, this is the previous weekly closing high for the NASDAQ. If we close below this price on a weekly basis, I would be very careful here that we don't get caught up, that there is a blindside situation here, that the market could actually be prepping to go down if we break below this NASDAQ weekly breakout level. Right now we're above it. We have the moving averages crossing over. We moved above the price trend line. A lot of things are pointing here to a sideways to higher market, but we also need to watch the breakout or the failed breakout above 12,006.95 as a line on the sand for the NASDAQ. Another way to look at this is if we can take a look at the daily for the NASDAQ, and we have what seems like resistance over the last couple of days. So we came to test the prior daily closing high from 2023, and you can see clearly the market rejected that breakout. that's a failed breakout. That's a red flag. And we know that failed breakouts are notorious for eventually taking markets lower. So we need to take note of that failed breakout. Let me give you that level to watch, because it's a level that we can also use if the market is to move higher. It would need to clear this level. So 12,200.82 on the NASDAQ, which is the prior weekly closing high from February of this year. So if we're going to move higher, then the market has to, there's no other way. If we're going to move higher, we have to break out above this price. And the more we start pulling back from this general area, the farther away from this general area, the farther away means that this is a market that is more and more setting the stage for some type of a strong pullback. Really supporting the bulls here is even a pullback back to the moving averages is a normal pullback within a market that has already seen lows. So it's going to take some energy, yes, to bring the market down, because on the daily we have these moving averages that could easily come into support, as institutions could use that as a reason to re-enter the market or to take up new positions on the bullish side. So yes, the market can pull back, but the bears have a lot of work to do before they can break this market. S&P 500, just like the NASDAQ and many other charts, we can see where we break down in early 2022 is now being tested again. And this is a concern for bulls, because this could be where we stall. So be careful, there could be a blindside situation here. We stalled here, and now we're already seeing signs here. So if the market is to go higher, we do need to show visual evidence by moving above this range, and that would be similar in a way. The volume could change slightly here because I noticed the settings was off a little bit. But if the S&P 500 is to move higher, it needs to clear this top side line here. And let me give you that price. So that's a price breakout. It would need to clear, I believe this is late January weekly closing high, and for the S&P 500, that breakout level, if it's going to take place and the market is to move higher, S&P 500 would have to clear this range above 4136 on the SPX. We can see this past week we did try to break out, but we were rejected. Again, that's a red flag. As I say in this video, there's a lots of subtle things that are taking place that are not as encouraging as the market has been. So I would say for the first time in many months, in my opinion, there's a situation here the market needs to clear to the upside. Otherwise, this could be pullback territory. Taking a look at the monthly charts, whether we go down or not is dependent on whether we slash below the monthly RSI level of 50. So the NASDAQ is getting very close. Again, some things are starting to show signs. S&P 500 is at 52 and change, but we need to watch this, because if it drops below 50, be on the lookout. Right now we are seeing the Dow positive for the month slightly, but again, if all of these major averages drop below 50, be on the lookout. This market is going to have a big down month. Failure for the market not to drop below 50 means that we are stable to bullish. The chart that has been speaking to me this past week is a semiconductor index. So we're going to use the SMH, and we can see here, if I draw a line, as you can see, similar to that of the NASDAQ, we break down here in late 2021, early 2022, and we stalled here early in the year, and now we're stalling again. So this is the weekly, but the key here is the monthly. So this is an area I would be very careful here, because we could already be seeing that this is stall point. There's a backtest situation here, and for now it seems to be rejecting this area. That's not a good look. The more we start drifting lower month to month, the more this is a serious pullback situation. Don't forget, we've really recovered well, call it here, from the lower 160s. We've gone all the way to 260. Big recovery, maybe we need a break. So I would be looking at the semiconductors also to see how they are behaving. We can also draw a line from this breakpoint in 07. We draw it as such. So there's a stall point here in 07. Of course, the entire market goes into a financial crash in 08 into early 09. And generally what I'm trying to say here is if you look at periods when the semiconductors were doing well, they were above this line. And periods where we were down, of course, we've been below this line. So this is an area I would say we need to watch, because if we end up seeing resistance and if we stay below the line here, then we have entered a phase where the market should start pulling back. So I would say this is a chart that I am watching. It's a blind side that we might not be considering. If you take a look at the transports, and again this is the monthly, one thing we can say here is that transports were down last week, or this past week I should say, and they are also approaching RSI 50 on the monthly. Whether we see a big drop in the market is going to be dependent on whether the semiconductors can stay above 50. The more they move below 50, the more we might be looking at a market that is going to be pushing the transports down, and most likely also the financials. No, most likely the general market is what I meant to say. Now, JP Morgan on the monthly, again, it is approaching RSI 50 at 50.18 or so. This is a concern, because if it drops below 50 and stays below 50, JP Morgan could see a big monthly drop. Same thing with Goldman Sachs. So GS here approaching 50 this Goldman Sachs. So GS here approaching 50 this month. If it cracks below 50, that's not good. If it can hold above 50, that's exactly what the bulls want to see. Now, speaking of financials, take a look at the XLF. We can see that it was down last month, and that's why we had a big down month in the financials. But now I see the probability, because it already had a big down month confirmed last month below 50. Looks to me, as I've been saying for a while, that this is a chart that is month to month looks okay in my opinion. So the XLF, unless it breaks the following line that I'm about to draw, I would say is probably, in my estimation, gonna be finding support, because this line has been good. In fact, this line was used with a double bottom support here in 2022 for the lows here on a monthly basis. So if we can, especially if we can recapture the RSI 50 on the monthly, then that would suggest that the next meaningful direction for the market is not down, but actually sideways to higher, unless we break this trend line. Breaking this trend line is going to be absolutely a major break. I mean a major break. It would give me echoes of this break here. And this was a serious break in late 07. So if we break the blue line, I would say yes, we might be going into a protracted bear market. My thinking though, this is just my position right now, is this is a good monthly support line, the blue line, and it would not surprise me that over time we hold and we build to start trading higher or sideways. What we can do is use the recent XLF weekly closing low and understand that if it breaks below that low on a weekly basis, not good if you're bullish. So let me give you that number. It's the XLF needs to stay on a weekly basis, needs to stay above this year's weekly closing high at 30.83. Anything above that, market's fine. A break of this line to the downside and watch out. That is setting the stage for a serious, massive sell-off, if not going into a serious bear market. Quick look at the Nifty, and we can see it's up the last 2 weeks, which is consistent with some observations I had made over the last couple months. This is this line here I was suspecting and pointing out could be where we find support. It also corresponded well with a prior entry point if I draw
So this is the line going back from 2020, this line here. And so I was extending this line over the last couple of months, and we've used this, or the market has used this, for weekly support zone. So every time we bounce on this line with uniform activity, we get a little bit of a bounce in the market. Got a double bottom here that took about a month and plus for the lows there, and over the last couple of weeks we tagged that level and we've bounced higher. One thing I can say here is, taking a look at the Nifty, is the monthly. And again, as long as the monthly is positive for the month, I assume, or we can assume, that this is still a good market. If we can take a look at where we break out, so I'll draw it as such. There's a breakout entry here in 2020, and I've been saying that as long as we are positive for the month, we can find this to be areas of re-entry into the market. So above the blue line on a monthly basis, and the Nifty and the Bank Nifty should be sideways to higher. Again, as long as they are positive for the month, we give the benefit of the doubt to a market that wants to go higher. Or we could also draw this support line here, and this is understanding that there's a breakout here which has recently turned into support. So above this line, this is a stable to bullish market with a very good probability now of coming back to test recent all-time weekly closing highs, maybe even improve on them, unless we break below this line. If we do break below this line, then that is a market that is going to change its behavior, and we might be seeing a big month-to-month drops. GLD, we can see here, I'm sure there's been talk about this formation here. Looked like a cup and handle, or we can say was a cup and handle breakout right here. We can even say there's another cup and handle, a different flavor but the same thing. We got a cup handle breakout this past week. So I'm sure this is attracting a lot of eyeballs, but as I have been saying, personally, I am not as excited about this breakout, and I'm gonna keep saying that until something changes. So good breakout. In fact, we are above the prior weekly closing high here at about 185 on GLD. So as long as it is above 185-ish on GLD, it means it's breaking out above the weekly closing high going back to 2022. So this was a weekly breakout this past week. Now, yes, lots of breakout, lots of seemingly momentum in the gold index, but as I've been saying, I would have preferred this to be moving to 3-year highs or moving above 69.1. Since it's not giving us any of those, I suspect this breakout is not of quality, and I said that in early 2022 here. Last year, around the same time actually, I was saying the same thing, that breakout in 2022 was suspect because, again, we had no movement of the RSI to 3-year highs, and we were not moving above 69.1. So I still believe that this is a suspect breakout, and I don't know, it's gonna take maybe a breakout later down the road for the RSI to move to 1, or for the RSI to have a chance of being to 3-year highs. But that's gonna take, if it's gonna be 3 years, we have to go all the way to late 2020, so that would be late 2023 for a move to 3-year highs. I don't see this. So in my opinion, yes, gold looks like it has momentum, but I would suspect month to month, don't be surprised, or I won't be surprised that this becomes a trap and that the ultimate big swing trade from here is to the downside. Having said that, the 2 times bullish gold ETF NUGT and NUGTS is actually looking good. So GLD, for me, GLD suspect, but this NUGT 2 times gold minus, so 2 times the GDX, is actually looking decent. Why? Because we can see it's moving to multi-year highs. In fact, let's go back. It is showing signs of moving to all-time highs, and that in itself, that movement to all-time highs, is a major tell that this could explode in price. So even though I don't like GLD, I have to give this some respect for higher prices, even though ultimately gold carries more weight. So we'll see. But I'm watching this also just because I need to respect the move to all-time highs on its monthly. I guess it's a situation that needs tracking. Right now, I lean to the suspicious side because of GLD, but this is a good breakout right here. It really is, based on the monthly. But I won't be surprised based on GLD that this ultimately fails. And that would be my suspicion, my expectation. Taking a look at crude oil, it's been higher the last 3 weeks. No surprise, because we talked about this line here. It tagged it and has moved higher the last 3 weeks. Not a big surprise. It is now also coinciding with the RSI, finding RSI 50 support, as I was suspecting, or at least as I discussed. So as long as the RSI is above 50 month to month, you will give this the benefit of the doubt to be sideways to ultimately high, as long as it's above 50. And of course, with the understanding that should things change and we break below 50, that's going to be a bearish sign. But net, the month is starting off very good here with the RSI 50 support. RSI 50 rejection with uniform activity, it tends to correspond with lower markets. Now we are seeing the exact opposite, which is RSI 50 support here, and now support here. All of this giving indication that markets have an appetite and a desire to be sideways to higher for now. And that's for the crude oil and also for the energy space. I was going to discuss XLE on the monthly, and maybe I'll just do that. Why not? But we can see XLE here on the monthly, as I've been suspecting and discussing, is there's a line here, which is a breakout line. And maybe for me to show that better, I need to go back, take a look at 13 years. All right, good. So this gives us indication of what's going on here from a visual perspective. We can see if we take the highs from all the way 2014, there was a breakout. In fact, I can even draw it that way and it still makes sense. So there's a breakout here in late 2021. And market responded well. Nice breakout there. We can say we've been holding here whenever we get pullbacks over the last year or so. And now we've turned positive for the month. As long as we're above the blue line for XLE, which is also, we can say, support above RSI 61.8, it increases the likelihood that now, more than likely, as long as we're above this blue line, the likelihood of going back to test recent all-time highs is now back on the table. Now, going back to my theme for this video, which is blind side, we need to be careful, because if BTC drops below 50 on the monthly, that's not a good sign. Its RSI is at 50.15. If the RSI is a good sign, its RSI is at 50.15. If the RSI drops below 50, stays below 50 month to month, expect a big down month. Remember, we had a good monthly move at the end of last month, month of March. It is because we moved above 50, and we could see the opposite if BTC cannot defend that RSI 50. In other words, if BTC is to go higher, it needs to hold its RSI above 50 on the monthly. Same thing for Ethereum. So Ethereum is slightly positive, about 2% higher. RSI is now at 40.49. I believe the RSI at the end of the month of March, if I am correct, was 0 point something like that. So any negative movement for the month, if it turns negative for the month, Ethereum could be opening the door for a big down month. So that's the downside. That's the blind side. Markets move the monthly RSIs below 50. Given all that we've discussed here, I would be very cautious. I would be leaning to a market that is poised to go lower. And if we can stay above 50, as discussed, then the market continues with its recent movement to the upside month to month. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.